Good morning. What is an audit engagement? Usually, at the time of appointment of auditor, the client and auditor has to meet once, discuss the terms and conditions of the audit, scope of audit, objective of audit. They will define and discuss. And the terms and conditions should be in written form. Then only I am able to understand what exactly how to be done. For example, I appointed you as my auditor to do audit. I was thinking that you only write accounts, you only do the audit. My expectation was different because I don't know that you can't do the both because I'm a client. I was under the impression that my auditor will prepare accounts as well as he will do the audit and submit a report. But you said, no, I will do only audit but not accounts. Some differences are there between auditor and client. Thereby, in future, there must not be any differences between or a conflicting environment between the auditor and client. So clearly define the terms and conditions. What is the scope of audit? What is objective of audit? What is the remuneration payable to auditor? Then what is the expenses reimbursement, direct expenses, indirect expenses reimbursement, and everything clearly defined. Then what will happen tomorrow? There is no dispute between the employer and, in the sense, client and auditor. The main purpose of this one is nothing but a smooth functioning of the audit. I wanted to know whether this work is going on effectively. That's why see, when you go for employment also, what they give, the service conditions will be there. So it's very clear what is to be, what is the do's and don'ts are there clearly. Here also engagement. So when you appoint me as an auditor, you have to send engagement letter. Before that, auditor and the client will discuss the terms and conditions in engagement. Either officially or unofficially, they will meet and discuss on that, and it will be drafted. Once engagement letter sent to me, I have to sign on that. That's called auditor's engagement letter. Means officially, these are the terms and conditions between you and me. Indirectly, I can say you are sending a offer letter to the auditor. Auditor is giving acceptance. Offer plus acceptance is agreement. Audit engagement is nothing but agreement between client and auditor. Nothing but the terms and conditions of audit. Tomorrow, no dispute, no conflicting environment between client and auditor. That's the only purpose of this audit engagement. Okay, let us see. Engagement means arrangement to do something. In the context of auditing, it means a formal agreement between auditor and client, under which auditor agrees to provide audit services. It takes a shape of engagement letter. And external audit engagement, nothing but when you are appointing outsider. Inside the internal auditor, not necessary. For external auditor, we have to define. The purpose of external audit engagement is to enhance the degree of the confidence of the intended users of the financial statements. Engagement also reasonable assurance engagements. That is nothing but already we know this. In India, companies are required to get their annual accounts audited by external auditor. And the non-corporate entities will choose their accounts to be audited by external auditor because of the benefits of such audit. Because if I file the returns, tax returns were filed, audited tax returns, when I go to the bank, I can borrow some loan. Otherwise, they won't give the loan to me. With audit, that is the advantage. So in case of a company, auditors are always appointed by shareholders of a company, and engagement letter has to be sent. Engagement is an agreement between auditor and client. Okay, no? It was not given in detail here. Personally, there is one lengthy note. Probably in the future, it may come out. Now, what are the benefits of the audit? Why audit is needed? I don't think from examination this is so important. Only knowledge sake, I believe personally. But a CA examination, anything may happen. That's why. But generally, this question important at a graduation level, but not at a CA level. And let us see what are the benefits of the audit. Why audit is needed? This is the first one. Nothing but while keeping the books of accounts, whether accounting standard, applicable accounting standards were properly followed or not. Inventory valuation you are doing, which audit you are continuing. You have to verify whether the AS2 is properly applied here while calculating the closing value. Not followed. You have to make a note. Because wherever applicable accounting standards we have to follow. Followed or not. Followed means it gives a fair presentation of the report. Then I can rely on the information generated by the management. Audited accounts provide high quality of information. It gives a confidence to users that information on which they are relying is a qualitative, and it is the outcome of exercise carried out by following auditing standards recognized globally. SCS were followed and accounting standards were followed. And other one is, in case of companies, the shareholders may or may not involve daily affairs. This already we know. In case of a company, there is an artificial person, day one class, remember? There is a diverse between ownership and management. The management is preparing the books of accounts, so financial statements. Whether these financial statements are representing the true and fair or not, how do I know? Then the owners of a company will appoint the auditor. That's why. And the financial statements are prepared by management consisting of the directors. Shareholders are owners of the company. They need an independent mechanism so that the financial information qualitative and reliable. Nothing but absolutely followed the rules and regulations while keeping the records, and their interest is being safeguarded by the auditor. Nothing but no manipulations, fair presentation of the financial statements. There is no window dressing. Nothing but manipulations were not done. And third one is, audit act as a moral check to employees. If any employee did the fraud or error, it can be detected expeditious manner. Especially continuous audit is there. Regular or irregular intervals audit is happening. So they will come regularly. Audit is going on regular basis. Will any employee dare to do certain irregularity in the company? Because it can be detected immediately, and it may cost his employment also. So it acts as a moral check on the employees from committing any kind of a fraud. The fear of being discovered by the auditor, because immediately it can be detected. Audited financial statements are helpful to the government authority for determining the tax liability. Once audit is done, you need not be suspicious. Directly on the income, you can calculate the tax applicable there. And audited financial statements can be relied upon by the lenders, nothing but bankers, for making of any credit decisions. If you want a loan, banker will ask only one thing: tax returns to submit. Second one, audited financial statements. Then only I will give the loan. Otherwise, that's a precondition. Including individual loans. I want a personal loan. When I go to bank, what they will ask? And 3 years tax returns I have to submit. Then only loan will be sanctioned. Which means authoritative that I have this much income, tax paid or not, secondary. I have to show the tax returns. Here also, any bank or financial institution would like to give a loan to the company. They expect that accounts shall be audited by the auditor. And audit may be also detect the fraud and errors, sometimes both, of course. And the audit reviews the existence and operations of the various controls and operating in the entity. This is nothing but an internal control system. Hence, it is useful at pointing out deficiency. No internal control system is free from the weaknesses. Definitely, we develop some rules, While implementing, some practical difficulties will come. We try to overcome by taking the corrective measures. Again, like a standard costing. Estimated consumption of the raw material, actual consumption of raw material, variance, analysis, correction. Here also same. Some rules we implement, and if it is good, we'll follow. If it is giving a negative result, we try to take a corrective action, again implement, again correct it, again implement. One fine day, you can have the best internal control process. Everywhere it happens, right? These are advantages. Now guys, whether audit is mandatory or voluntary, already day 1 class, if you remember, for every company, corporate, audit is compulsory. Body corporate, audit is compulsory. Any company registered under the Companies Act 2013, audit is compulsory, irrespective of your size of the company, nature of the company. Fine. Second one, non-corporates are there, like a sole trader, partnership. Audit is not compulsory unless the monetary threshold, individual case, 40 lakhs and more gross total income. In case of a business organizations, 1 crore or more income is there, audit is compulsory. If the monetary threshold is not satisfied, my total income per annum, assume, individual, I am a professional, my income is, example sake, less than 40 lakhs. No audit, only returns I have to file, that's it. Whereas more than 40 lakhs, audit is compulsory. That comes under Income Tax Act, if you remember, 44AB. 44AB is a tax audit. It is compulsory if the threshold is increased. 44AA is nothing but you have to maintain the records as a professional. Income from the business or professional concept is there. Anyway, audit is some cases compulsory, some cases it is purely voluntary. Especially partnership, it is not compulsory. For example, in a partnership of 50 partners are there, you are active partner, others were not participating. The one partner may be suspicious about your maintenance of records. Before someone come and ask an audit, you can ask them, hey, appoint your person as an auditor, let him do audit. You are not appointing an auditor. If you appoint auditor, you and the auditor may be colluded. That's why you should ask active partner, you will ask other partners. So you people can choose one person as an auditor, let him do audit. How much confidence? And means I maintain the accounts with utmost integrity. I never compromised. Then definitely it shows your character, moral character, isn't it? I never do any irregularity in this entity. I was acted as a safeguarding our interest in this business. Voluntary. Before they ask, but then everybody will raise their hand. Yes, good thing. They are doing the wonderful job. Otherwise, no, people suspect. You are active partner and you appoint your own person as an auditor. Definitely, though there was no irregularity, one fellow will make a comment. Auditor and both are friends and negative comment will come. People are there, only make a statement. Better, na? You don't appoint anyone. Let them appoint. Then you have edge. You can speak. I did the business in a utmost carefully. It is not necessary that audit is always legally mandatory. There are entities like a companies, audit is compulsory, required to get accounts audited under the law. Non-corporate entities may be compulsorily required audit of their accounts under the tax laws when their income 40 lakhs and more than 1 crore. For example, in India, a person is required to get audited if the turnover crosses the certain threshold limit of the income tax law. That is now 40 lakhs. It may fluctuate from time to time. Okay. It also possible that certain entities like schools may be required to get their accounts audited for the purpose of obtaining the grant assistance from the government. Government schools are there. Government is funding. Then definitely expect that government auditor will come, do the audit and go. Otherwise, funds may be misappropriated thereby. And audit is not always mandatory. Many entities may get their accounts audited voluntarily because of the benefits for the process of audit. Many such concerns have their internal rules requiring audit due to advantages following from the audit. So, despite whether compulsory or not, better, your accounts shall be audited. Now, who appoints an auditor? Already we know this. In case of a company, the shareholders will appoint the auditor. This is the shareholders meeting. Just I am giving an overview for you only. Company with audit committee, company without audit committee. If audit committee is there, audit committee will recommend the name of the auditor. Board of directors will approve and recommend to shareholders. At general meeting, we pass one ordinary resolution. Audit committee recommend the name of auditor, approved by board of director, and resolution passed at general meeting, which means who is appointing authority? Shareholder. So once shareholders are appointed, to whom I should be accountable as an auditor? Shareholders. That's all. That's why to whom I have to submit my report. Who is appointing me? For them only I will submit a report. For example, audit committee is not there. Audit committee not compulsory for every company. That time, the board of directors will recommend the name of auditor to shareholder. At a shareholders meeting, we pass the appointment of auditor. Auditor's appointment always requires ordinary resolution. That's all. This is the only time being we remember. In company audit, again this point will come. I explain this point. Okay, na? So here, who appoint an auditor means in case of a company, shareholders will appoint the auditor. Company with audit committee, without audit committee, appointment is made by only shareholders. But recommendations only will different. That's it. Committee is there, committee will give recommendation. Committee is not there, board of directors will give recommendation. That's it. Right? And in case of a government company, the auditors were appointed by C&AG, Comptroller and Auditor General. That's it. See this. Generally, auditor is appointed by the owners, in some cases constitutional, otherwise the government authority, in accordance with applicable laws and regulations. For example, under the company, auditor is appointed by members, nothing but shareholders at general meeting. Whereas shareholders are owners of the company, hence auditor is appointed by general meeting. And however, in case of a government company in India, auditors are appointed by Comptroller and Auditor General, COMPTROLLER. The spelling you have to remember. C&AG, an independent constitutional authority. Okay. And in case of the take a case of the firm who engages an auditor to audit accounts, and in such cases, auditor is appointed by partners of the firm, which means firm is appointed as an auditor. Who can be auditor? Either individual or firm of chartered accountants or LLP. Any one of these persons can be appointed as an auditor. You can become an auditor as an individual, or group of the people created the CA firm. The firm can be appointed as an auditor. Otherwise, LLP, limited liability partnership, also can be appointed as an auditor. And there may be situation in which the auditor may be appointed by government authority in accordance with some law and regulation. For example, appointment under the tax laws by government authority. Tax audit is there, that case. Otherwise, cooperative society. Cooperative society comes under Cooperative Societies Act 1912. Accordingly, auditor's appointment will be made by separately. Registrar will appoint. Okay. But we are discussing about company point of view, government company 2 points. Company point of view, auditors are always appointed by shareholders at general meeting. That's only to be remembered. And other one is, in case of government company, auditors were appointed by C&AG, Comptroller and Auditor General. Now, to whom report is submitted by auditor? Auditor will submit a report to whom? Right? See this one. An outcome already appointing authority. That's the only clue. Appointing authority. For example, I have appointed you as my employee. You report to me only, not others. Similarly, Who appointed the auditor? Shareholder. He reported to shareholder. You remember in the previous class, what are the qualities of audit report? First one is the title, second one addressee. Addressee is always two members of the company. Nowadays we are using the word only member, not a shareholder. Wherever I use the word shareholder, you treat it as a member, please. Okay, na? Because that is there already in the years together. By default is coming out. Because outside also member means people can't understand immediately. Shareholder means everybody will understand. Outside practice also. It will take some time, you know. An outcome of the audit is a written audit report. Written audit report, which means report cannot be oral. Which the auditor expresses an opinion, the report is submitted to the person making the appointment. In case of a company, shareholders; in case of a firm, the partner who engaged him. Okay, and we shall now discuss, understand, of course, this is only regarding the case point of he gave one case, and will you able to do this case at home? Shall I read? The only thing is he gave the case and some MCQ questions were given. You try. In case if you are not getting the concept, any doubt, you don't see answers. You read MCQ questions, you mark it your answer. If you think your answer is C, answer also C, you are right. If answer is A but given as a C, then why not it is A? You can ask me like that. We will discuss in the next class. No readout means I will read out, up to you. 5 6 words. We'll do at home. Okay. Try. What is there? Answers also there back of it. They gave answers also. Try. Okay. An application based question was given. Try. If any answer you are not secure getting, please ask me. We'll discuss. Now guys. Now what is the meaning of assurance engagement? We know audit engagement. Terms and conditions between the auditor and client. Now this is assurance engagement. Means an engagement in which practitioner expresses on a conclusion designed to enhance the degree of the confidence of the intended users other than the responsible party about the outcome of the evaluation and measurement of the subject against criteria. What does that mean? Ours is a CA form. You are appointed as an auditor. You did the audit, report also given. Everybody will accept the report. But still some users means stakeholders. Some of them want more confidence because just to pass the examination, doing the audit, they won't get a confidence over you. Because, array, youngster here, decisions are pushed and pulled. How did they did the audit? Some were suspicious. Whereas in our CA form, one senior practitioner is there, having a 20 years or 30 years of the work experience or 15 years as a chartered accountant, got a rapport in the society. Then he said, they have done a wonderful job. They have done a wonderful job. They really did well. I had verified their information and a test checking I have done. Really done. Super. In fact, he is not doing anything. One statement he made and it will influence the users, and that is called assurance. There is nothing but a assurance engagement. In fact, he is not doing anything. He is building the confidence, isn't it? He is building a confidence on the users. Sometimes we want to trust a person. Sometimes we look at a faculty and say, will he able to do it? We get a doubt. After classes were over, he really did well. We get a doubt on sometime, isn't it? And initially we won't have confidence on the person, but later you may have a confidence. That confidence we have to bring. Just started the CA form, youngsters, how they are doing the business means one person said, hey, nothing to worry. That batch, oh, that farmer, super and wonderful auditors. That word is enough. And people will take it as granted. Hey, so and so person said here. We can relay the information given by them. Are you understanding what is the practitioner words? And Supreme Court judge said something. People listen like this. A local high court judge, otherwise a local metropolitan one lawyer speaking something. Baat kar rahe bhai. Attention won't come. He is telling the same. He is telling the same. But users won't get a confidence on the local person. One higher practitioner, Supreme Court judge having a Ramjamatmal related, of course, is now no more. Such a person comes and saying something, and people say, yes. If those people give one word, that person also get name and fame in the society, like that. It means that practitioner gives the opinion about the specific information due to which the user's informations are able to make a confident decisions, knowing well that chance of information being incorrect is diminished, which means you need not doubt about their work culture. They did wonderfully, and you can accept this information, take it as granted. Practitioner certificate. Okay, na? They are not doubting on our work culture. Only thing is they want people say, the word has to come from horse mouth. There's one saying. Means there's a final word. That's a final word. Means people will trust like that. Elements of the assurance engagement. Here, three-party relationship involving. One is the practitioner, other one is a responsible party, other one is intended users. Obviously, myself is the bank, you are the auditor, she is the practitioner. You did the audit, I myself is the bank. A youngster, just 22 years, CA passer and doing the audit. Young lady, how she might have done it? I'm not getting confidence on your report. In the meantime, practitioner has come and said, Akshara, oh, wonderful person, and without referring, by seeing the farm name, oh, this is Akshara's farm, wonderful ending, super, she is a rank holder. Then I get confidence, okay. Not that I'm not doubting your integrity. Thing is to build a confidence. Three parties involved. And an assurance engagement involves the above said three parties, that is practitioner, a person who provides the assurance. The term practitioner is broader than auditor. Audit is related to the historical information, whereas practitioner may be providing the assurance not necessarily related to historical financial information. He is not doing audit and telling. They're telling that wonderful people and they never do mistakes. Go ahead. That word is enough. People will take it as into consideration that. And a responsible party is the party responsible for preparation of the subject matter. And intended users, persons for whom assurance report is prepared, and these persons use the report for making the decision, whether to sanction the loan or not, bank, finance institutions, tax authority, etc. can be. And appropriate subject matter, it refers to the information to be examined by the practitioner. And for example, financial information contained in the financial statements while conducting the audit of the financial statement. And suitable criteria, this refers to benchmark used to evaluate the subject matter like standards, guidance, laws, rules, regulations, etc. And sufficient appropriate evidence. As already we know this, sufficient appropriate audit evidence. What is the meaning of sufficiency? Quantity. Appropriate means quality, as already we know. Same paragraph this is. See this. The practitioner performs the audit assurance to obtain sufficient appropriate audit evidence. Sufficient appropriate audit evidence. And it is on the basis of the evidence that conclusions arrived and the opinion is formed by the auditor. Sufficiency refers to quality of evidence obtained by auditor. Appropriateness refers to quality of the evidence obtained by auditor. Once the evidence may be providing more comfort to the auditor than otherwise evidence, auditor providing more comfort in the quality Therefore, the appropriate evidence should be both sufficient and appropriate. Sufficient means the quantum of the evidences. Appropriate means nothing but quality of assurance. Already we have done purchases example I told you, if you remember. At 4 places you can gather the evidences. Written assurance report is appropriate form. A written report provided containing the conclusions that conveys the assurance about the subject matter. Written assurance report is an outcome of the assurance engagement. Same elements were given here and repeated this point. Side headings were again repeated only for a review sake. Have you got the concept? Huh? Now say the other one is, what is the meaning of review and audit? Review is different, audit is different. Your work can be reviewed by one person. Review is whether you are working or not, I am verifying, that's it. Audit means I collect the evidences, evaluate, I go for confirmation, I have certain authorities. Now see, we have learnt that audit is a reasonable assurance engagement. What is the reasonable? Not absolute assurance. Not 100% guarantee. We are doing audit close to 100 but not 100. That way. It provides the reasonable assurance. However, the review in a limited assurance engagement. Review in a limited assurance engagement. Limited assurance means I have done the audit. Q1 completed, Q2 completed, Q3 audit we have to do. Q3 I was out of India. Total receipts directly into bank, no doubt on that. Only payments side I was not there 3 months. So I wanted to review the payments effectively. Review, limited review, only this part to verify. This is not audit, review only. Review all the transactions of this month to this particular day, you verify this. Okay, limited review. Restricting, na? Your audit is not restricted. Here, person can be restricted. You only do this part and submit a report to. And further, the review involves the fewer procedures and gather the sufficient appropriate evidence based upon the limited conclusions drawn up. Both audit and review are related to the financial statements prepared on based on the historical financial information only. Audit is the total audit. Review means only one particular activity we are going to examine. So both were not one and the same. Other one is the types of the assurance engagement, reasonable assurance and engagement versus the limited assurance engagement. Above points only repeated here. Quickly we do this. As we discussed, assurance engagement provides the assurance to the users. The difference is of degree, and reasonable assurance, the engagement like audit provides the reasonable assurance which is high level of assurance, and limited assurance engagement means review that provides the lower level of assurance than audit, because you are not doing totally, only part of it. Hence it is only a moderate level of assurance. And he gives some kind of comparative analysis, verify. Reasonable assurance, limited assurance. Reasonable assurance means not absolute one. Limited means only certain points were examined. See this? Reasonable assurance engagement provides a high level of assurance, not absolute. Close to 100 means high level only. 95% means high level only, like that. And limited engagement provides lower level of assurance than reasonable assurance. And it performs the elaborate and extensive procedures to obtain sufficient appropriate audit evidence. It performs the fewer procedures compared to the reasonable assurance engagement. It draws the reasonable conclusions on the basis of the sufficient appropriate audit evidence, the reasonable conclusion. It involves obtaining the sufficient appropriate audit evidence to draw the limited conclusion. And example of the reasonable assurance is the audit engagement, and here it is review engagement. Besides the reasonable assurance engagement, limited assurance engagement, there is another kind of assurance which is related to the matters other than historical financial information. Such assurance may relate to the prospective financial information, not to the historical financial information. What is the historical? From the 1st April 2023 to 31st March 2024, already transaction occurred. That one I am going to audit. Historical information. That won't change again. Prospective means it is going to change from time to time thereby. And it may relating to providing the assurance in the internal controls. It may related to provide assurance on internal controls in the entity, because working going on, internal controls will be reviewed from time to time. Immediate action will be taken regarding the prospective term. And initial prospective financial information means the financial information based on the assumptions about events that may occur in the future and possible actions by the entity. It can be form of a forecast or a projection or a combination of the both. When you go to the bank for a loan, what banker will ask you? I want 4 years or 5 years projected profitability. Not profits. Projected profitability means estimated profits. Profits may be there, may not be there, we don't know. Based on existing data, we are able to forecast the future. This year, how much profit is there? 50 crores of profit. Next 3 years of projected profitability means auditor will prepare one statement and submit. That is called future prospective financial information. This is to be noted that such a type of assurance engagement examination is not of a historical information. Nothing but a income was not there. In future, business may be there. What is tomorrow? An extension of today is tomorrow. What is my business tomorrow? An extension of today business only tomorrow. I am doing well today in business. Definitely, I do well in the tomorrow also. Suddenly, overnight, nothing will happen in a business, isn't it? Unless you ruin yourself as a businessman. And a smooth flow will be there. Then based on that, future income, we are going to foresee. Okay, na? And here, it is important to note the difference between historical financial information, prospective financial information. The historical means former relating to the information expressed in the financial statements of entity about economic events, conditions, circumstances occurring in past. Already over, financial year completed, occurred means took place. And the later means prospective financial information relating to the financial information based upon the assumption about occurrence of the future events and possible actions by the entity. Last year profit was 50 crores and next year estimated 75 crores. Prospective financial information. It was not there. We were expecting that this much profit may come. Next year, second year, 100 crores. Third year, 200 crores. Estimated profits like that. Therefore, historical financial information is rooted in the past events which have already occurred, whereas prospective financial information is relating to the future events only. Right? Future trend analysis, we forecast the future. In assurance report involving prospective financial information, the practitioner obtains the sufficient appropriate evidence to the effect that management assumptions on which the prospective financial information is based are not reasonable. You should make a reasonable assumptions. You can't make a unreasonable assumptions. Like last year profit 50 crores and you know the physical resources, human resources, financial resources, And the next year, what could be your increment of the sales increase? Maybe 10% to 15% to 20% to 30%. But next year they said our profit would be 100 crores. How it would be double? And are you going to develop double the infrastructure, double the manpower? There should be some kind of assurance, na? How could you make an assessment? You know physical resources, how much furniture is there, you know how many machines are there, you know what is the utilization of machine. Already these machines are using 24/7. People are working 3 shift. With 3 shift only profit is 50 crores. Unless you develop the another infrastructure, profit won't increase. No? Management got any plan to go for further extension? No plans at all. For that you need a capital again. Auditor has to verify all those informations, and unreasonable assumptions cannot be made. See, in BCom first year and he got a percentage of the say 60%. He was disappointed. No, in the second year, first sem I should get 90%. Possible? Be practical. When first year is the 60%, in the first sem, in second year first sem, you suddenly will get 90% average. Impossible. You may get a 75%, 70% average you may get. Average I am saying. This has to compensate. No? If first year itself is you got 85%, getting second year 90% means I can understand. Reasonability is there, reasonable assumption. First year I got just 36 marks. So second year I want a 80% means how does it possible? Will you able to cope up? You are writing exam for 100 marks only, na? That's why reasonable assumptions we have to make. For that you should know organization's SWOT analysis. What is the strength and weakness of organization? What are the opportunities? What are the threats? You should know and make a meaningful assumption. What is there and making of assumption is easy, na? Today also I can say, tomorrow we can complete audit. Possible. How can I complete audit one day? People say, 12 hours audit will complete. Complete. What is there? How can you complete audit 12 hours and you tell me? Unless you are knowledgeable one outside, opposite person, how can you complete 12 hours, you tell me? There were reasonable assumptions one has to make. The prospective financial information is properly prepared based upon the basis of the assumption that is properly presented. All the material assumptions are adequately disclosed. And the prospective financial information relating to the future events, and while evidence can be available to support the assumptions on the prospective financial information is based, hence evidence itself is generally future oriented. Truly, na? Nothing, no paper, nothing. Based on the past experience, we are able to analyze the future. Nothing was happened. It may happen. That's it. And the auditor is therefore not in a position to express an opinion as to whether the results shown in the prospective financial information will be achieved. Nothing but a reasonability is there, everybody can achieve one. Unreasonable assumptions only difficult, you know. Everybody got their own expectations. Sometime, maybe not a relevant example, a relevant one. Before elections, every party will speak. I will sweep the election. After results, we will understand what exactly they were, isn't it? Here also, because one should have the realistic approach. What exactly I am. I can't say that I am going to lose the election, isn't it? Every company will say, I am performing well. Definitely we can do this and that. Nothing wrong in having a optimism, but you should not have it too much of that. Therefore, such assurance engagement, practitioner provides a report assuming that nothing has come to the practitioner's attention to suggest that these assumptions do not provide reasonable basis for the projection. Reasonable means high level of the projection, high level of the assurance. Then definitely, yes, it can be believed. Go ahead. You can give loans, no problem. There is no abnormal assumptions were not made. Good one. And hence, these are the such type of assurance engagement provides only a moderate level of the assurance. Examples were given here. Audit of the financial statement. Type of assurance and engagement, reasonable assurance engagement. High level of the assurance, not a absolute assurance. Second one is review of the financial statement. Review, limited part only, that's why limited assurance engagement. Other one is examination of the prospective financial information regarding a future. Then it provides the assurance regarding reasonability of the assumptions forming the basis of the projections and related matter. Projections are nothing but estimations only, we expect. And a report on the controls operating at the organization, nothing but a internal controls who commented. It provides a assurance regarding the design and operations of the control. Means whether you have effective internal control system or not, they will certify, right? And assurance engagements, these are the same points and here. Reasonable assurance is audit, limited assurance is review, and assurance engagement dealing with the matters other than the historical information, examination of the prospective financial information, and assurance regarding the operations of the control. Same point in summary chart. The pictorial form it was given. Then given one situation, just you have to read the points. Okay. This also at home you try. The management of the exotic tours and travels limited requested its auditor Raja and company to provide assurance report on the financial information for first quarter of the year for skipping required detailed procedure, which means limited review na auditor review, it's only review, isn't it? And as a company provides such a report, what would be the nature of such a report, and be necessary them to obtain sufficient appropriate audit evidence in such a case also. Yes, in every case he has to obtain. Now, qualities of auditor. This is again sometime important in the examination. An auditor is concerned with the reporting on the financial matters of the business and other institutions. The financial matters inherently are to set with the problems of the human viability, errors, frauds, and frequent. And tact, caution, firmness, good temper, integrity, discretion, industry, judgment, patience, and clear-headedness and reliability are some of the qualities of the auditor. Tact means he should know tactfully should deal with the people, and while gathering information from the people, you should have that tactfully. When you need, you have to be submissive. With some people, you have to talk with the submissive. With some people, with a little anger. Some people with authoritative. Wherever necessary, you should change your attitude patterns. Tactfully take the work, and generally won't show any anger. You should not shout at your office people, give this information. You can't compel anyone. Whether you can make a request. You should only request it as an auditor, because you are outsider. Came to my company to do audit. If you want any information from this company, from any person, request. You can never force anyone. How to request is based on the relationship. With the managers, where managing director is there, with the humble you have to speak. With our equals are there, at par with the people, there. With the politeness. The remaining people, youngsters are there. Little pleasing words if you speak, no? People will help you out. When you speak in authoritative manner, people won't respond. And so that tactfulness. Caution, of course, all the meanings you know, no? These words. Should have, in short, all those personal qualities that go to the make a good business contribution to make a good auditor. In addition, he must have shine of a culture for attaining a great height. Means you should have ambition that I should become something in my life as. And he must have the highest degree of integrity. What is integrity? Straightforwardness, honesty. You develop this culture and speak always the truth. Nothing wrong in that. Of course, wherever necessary, you can change your ways and means, but to the extent possible, we will be honest and straightforward. Auditor is the one of the best quality and backed by the adequate independence. Independence means my work is not influenced by anyone. Adequate means sufficient. Give a free hand. How to prepare? I should not tell. You prepare. Because you have your own ease. You have your own technique. You prepare that. My job is giving a clarity of concept. Then how you prepare? I should not tell. Hey, prepare like this only. I should not interfere. You are doing audit. How to do audit? You decide. I can't compel someone, you do audit only like this. The auditor who holds a position of the trust must have the basic human qualities apart from the technical requirement of the professional training, education. Of course, here, despite your best qualification, best experience and all, first of all, don't forget you are the human being. That empathy is needed. That kind of the respecting opposite person, first of all. The moment you become a CA, don't get a horns. Be normal here. Be normal. Be normal. Though you are CA, you don't show your arrogancy to the world. That will kill you one day. I am not joking. Thereby, auditor must have that humbleness. Very requirement is down to earth. People always say, na, what a qualified person, but still he is down to earth, grounded. He never behave as if he is the qualified guy. And he mingle with the people, never show any kind of attitude with us. That is required. Then you are gaining acceptability from that leads to build a network. That brings a client. Remember, these are all techniques and how to get a client. If you are rude with one client, why other clients will come? Tell me. So that basic human quality you should not forget. We are human beings. Despite our best qualification, technically you are expert and all, right? And he is called upon constantly to critical review of the financial statements, and it is obviously useless for him to attempt to track unless he knows his own knowledge is that of the expert, and a exhaustive knowledge of accounting in all its branches and sine qua non of the practice of auditing, and he must be thoroughly all accounting principles and techniques. Nothing but you must be a knowledgeable one and see to that you give the best. Don't forget you are a human being. Never show your anger. Never speak authoritatively and speak with politeness and always request. When you request and people will respond. When you order, people show the attitude. You only notice then. You go to your Amma and request, Amma, I want this food today. Already she prepared the food. If you request, you will prepare again. If you go on authoritative say, what is this? I don't want, I want that. Eat or go. Simple and your own person. When I go for audit as a client, I should be very careful. Na? He is giving my fee, isn't it? I should be very careful and cautious. Okay, those qualities please learn. So now see the other one is engagement and quality control standards overview one. The following standards issued by under the authority of ICAI Council collectively with engagement standards. Nothing but various standards issued by ICAI. The standards on auditing, SCS, which apply audit of the historical financial information. So, while doing audit, what we have to follow? SCA, standards on audit. Okay. Second one, standards on review of engagement. Standards on review. When review, limited review is there that time. So, which apply to the review of the historical financial information. and standards on assurance quality, assurance engagement, which apply to assurance engagement other than the audits, a review of the historical information. We know what is the assurance, nothing but one of the practitioner will give the opinion on the matters. And standards on related services, standards on related services will apply in relation to the agreed upon the procedures to information and compilation agreements, engagements and other related services engagement. Later part to come across SCA, SRE, SAE and SRES. And for the purpose of these standards established high quality of standards and guidance areas in the financial statements of audit, other types of the assurance services. Standards on auditing. Standards on auditing apply in the context of the audit of the financial statements by independent auditor. It is important to remember that standards on auditing apply in audit of the historical information. These establishments high quality benchmarking and are followed by auditor in conducting audit of the financial statements. SCAs have been issued on a wide spectrum of issues in such a field, in the field of auditing, ranging from the overall objectives of independent auditor, audit documentation, independent auditor, audit documentation, and planning and audit of the financial statements, identifying and assessing the risk of the material misstatement, audit sampling, audit evidence, and forming of a opinion report on the financial statements. These are all covered in all significant aspects in audit financial statements. For example, SA 200. It shows overall objectives of the independent auditor, conduct of the audit in accordance with the standards on auditing. Audit 230, audit documentation. Audit 315, SA 315, identifying and assessing the risk in the material misstatement through understanding the entity and its environment. SA 500, audit evidence. And revised SCA 700, forming a opinion and reporting on the financial statements. Reporting SCA 700, I think I told earlier also. Okay. Standards and review engagement. These are all SCS. Okay. Example for SCS. Standards on the review engagement. Standards on the review engagement apply in the context of the review of the financial statements. It is already understood that review is limited review, limited assurance engagement. It provides which is lower than provided by auditor. Auditor give high level of assurance. Limited review will give only lower level of assurance. Okay. Because restricted audit I am doing there. It is due to the fact that review involves the fewer procedures compared to the audit. Since a review also provides assurance to the users and also involving obtaining the sufficient appropriate audit evidence. For example, where auditor performs review of the interim financial information. If you want to declare the interim audit, then interim audit is conducted, interim dividend I want to go, interim audit, we will do the limited review there. And standards, SRE 2400, engagements to review historical financial information, and SRE 24110, review of the interim financial information performed by the independent auditor of the entity. And to be noted that both the standards and auditing and standards on the review engagement apply to engagements involving historical financial information. Standards on assurance engagement. This is another set of the standards apply in assurance engagement dealing with the subject matter other than the historical. Other than historical. This is keyword, nothing but a prospective financial information. Such an assurance engagement do not include audit or review of the financial information. Hence, it is the standards also known as standards on the assurance engagements. For example, assurance engagement relating to examination of the prospective financial information. It is to be noted that such a type of the assurance engagement and examination is not the historical financial information, or the engagement may also related to provide assurance regarding non-financial matters like a design and operations of the financial control in the entity. And for example, here standards for the assurance engagement 3400, examination of the prospective financial information, examination SA 3420, assurance engagement report on the compilation of the pro forma financial information included in the prospectus. Standards related to the services. And lastly, these are the standards related services. These standards apply in engagement to perform agreed upon the procedures regarding the financial information. For example, engagement to perform the agreed upon the procedures may require auditor to perform certain procedures concerning individual items of the financial data. Say, accounts payable, accounts receivable, purchases relating to the related party transactions, and sales and profits of the segment of entity, and financial statements, say balance sheet, and even complete set of the financial statements. The engagement in which the practitioner may also called upon to assist the management with the preparation and presentation of the historical financial statement, here practitioner, and without obtaining the assurance that information. Such type of compilation engagement fall in the category of the related services. Practitioner issues a report on clearly stating that it is not the assurance engagement and no opinion being expressed. Only thing is saying that they did a good work. Practitioners commented. And this type of the services are called related services on the standards. Related services on standards. Related service on standards. And see, this one's deal with the practitioner's responsibility. Examples were given: SRS 4400, engagement to perform agreed upon the procedures related to financial information. 4410, compilation of the arrangement. So guys, it is to be clearly understood that above standards, standards on auditing SCA, standards on the review engagement, standards on the assurance engagement, standards on the related party services are collectively known as engagement standards. So overview, you have standards, no? Why all so many came into force? One is for audit purpose, one is for the limited review, one is for the service related, one is for the assurance standard. Okay. Engagement standards. So these are all issued by engagement standards under the authority of the ICAI, deal with the responsibilities of auditor and practitioner. These are developed by the ICAI. And the standards on the quality assurance. Standards on the quality control, SQCs. This is a required, and it has to be issued to establish the standards and provide the guidance regarding firm's responsibility for its systematic quality control for the conducting of audit and review of the historical financial information, other assurances relating to the service. Nothing but yours is a CA form. While doing the audit, did you plan effectively, efficiently? The outcome of the audit should be perfect. For that, what steps you have taken? This only thing is how your organization is there, first of all. Your CA form, do you have the proper infrastructure to train your assistants? Do you have the proper facility? Then only they are able to do now. Without proper, they can't sit, there are no proper arrangement for sitting. How can they learn the work? Quality of the form, infrastructure, as well as how you are training your people is equally important. And QC1 has been issued in this regard, that auditor, practitioner establish a system of the control so that the firm, its personnel comply with the professional standards, regulatory as well as legal requirements, report issued appropriately. And it is a basic objective that while rendering the services to which the engagement standards apply, there should be a system of the quality control in the firm to ensure complying with the professional standards, legal requirements. The system of the quality control ensures appropriate reports from the circumstances. If I have the proper facility to train my employees perfectly, I can expect the best result from their work also. If I don't have the proper facility within my firm, how can I expect that my people go and do the work and come with the best quality? That is. Further, it is also to be remembered that standards on quality controls are to be applied for all the services covered by engagement standard. And why are the standards needed? The standards ensure carrying out the audit against the establishment benchmark at par with global practices. Today, our standards are at par with global standard. And because anywhere, today there is, I think in future is going to happen. Our people can go to Canada and UK, practice directly. And those people come to India, they can practice in India directly. Because standards are now one and the same, you know pretty well, because balance sheet formats also changed. Now everybody got their own criteria. And the standards improved quality of the financial reporting, thereby helping the users to make the diligent decision. Standards promote the uniformity, audit of the financial statements carried out through the standards. And the standards, nothing but uniformity means all are following the same standard. When you do audit, one report, I do audit, another report won't come. Standards are same. In same rules, we have to follow. And the standards equip the professional accountants with the professional knowledge and skill, and the standards ensure the audit quality. And duties in relation to the engagement and quality control, nothing but who is responsible. It is the duty of the professional accountants to see that standards are followed in engagement taken by them. Nothing but who should implement this? Auditor. When I took the engagement, I accepted auditship, I must ensure that all standards I have to implement. And ordinarily, these are to be followed by professional accountant. However, situation may arise when the specific procedures as required in the standard would be ineffective in practice particular engagement. In such a case, he is required to document how alternative procedures performed to achieve the purpose of the required procedure. Nothing but to the extent possible, follow standards. For example, sole trader, not necessary. It's not practicable also, I can't apply everything there, isn't it? Limited operation. Then alternative audit procedures can be adopted. It should be documented. Why you did not follow those standards here? Okay. Also, reason for the departure has to be documented unless it is clear. Further, his report should draw the attention in such a departure. You shall also noted that mere disclosure in the report does not absolve the professional accountant for complying the applicable standards. So these are all above points only, just to give as the review point. Then he gave the situations. Just you try once. And application based questions were there here. With answers, so that you don't worry. In case any answer, if you think answer he gave C, you felt answer as a B, you can ask me, sir, I thought my answer, my first choice was B, why C? Like that you can ask if you want. Okay, no? This is, I think, unit 1 we have done it. You try all these points. If you want anything, I will do it. Up to you. Thank you guys for the day. Tomorrow, next class, we'll start second unit. But keep learning. So unit 1 completed means by today is totally on qualities of auditor, and other one is the standard side questions.